Hi guys and welcome to the trading show. This week we are gonna talk about
Markets. Energetics rally continues. Our portfolio, EuroFX, is finally here. Tip of the week, intraday reversal on Nasdaq futures and the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Good week for the markets. We see mostly positive returns everywhere. As you can see, definitely green signs prevail. In particular, starting from the equity indices, the Nasdaq has reached the new historical highs as well as the mini S&P. And obviously the volatility is decreasing both on the Nasdaq and on the mini S&P and in general on all equity indices. Also the energy sector did very well. Take a look at crude oil that from the lows of March, during which I remind you it touched the negative prices, has even reached the value of $73. Very well also gasoline and heating oil future. The metal sector also recovered, which in recent weeks had disappointing performances. Soft commodity also did well, while we see some negative signs with regards to cereals. But above all, the Linox future is the worst performer. He had risen a lot in the past, and over the last few weeks, as you can see from the chart, it is in a strong downtrend. Always talking about negative returns, then we have Bitcoin that last week tried to get out of this trading range. The current week instead tried to do the opposite, so it broke the lows but has been able to immediately re-enter. Clear is that this is a very important support. At the moment it is holding. Let's see if it will be so in the coming weeks. As for the historical volatility, as mentioned, it's still very low both in the short and medium term, while as regards the implied volatility, we have a very well defined term structure. We are in strong contango. As you can see, the short-term volatility is certainly lower than long-term volatility. The VIX is at very low levels compared to the values of the last 12 months, so at the moment for the stock markets there seems to be no concern among the operators. After seeing some key statistics on financial markets and given the fact that automated traders also use this data to build their trading strategies, as usual we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome back to this new appointment with the analysis of our portfolio. This week, finally, we can talk about the EuroFX future, which is quoted in Chicago, so at the CME, Chicago Mercantile Exchange. And in particular, I want to show you two strategies that they are both reversal strategies. And in particular, we can start from this first system. There is a reversal strategy, we can say, that enters when fade breakouts calculated on levels of 3 days ago happens on this market, as said. We can see that the strategy took a beautiful short trade here for a value of over 3,500 and then entered short with a small loss of around $500. This strategy is a multi-day one, so it stays in the market also after the end of the session. And now we can have a look at the strategy performance report, where we can see that during the last months this particular future was not so good. You can see here the drawdown, but during the last months, we can say of the last year, so 2020, this future and in particular this strategy started to grow again, to make profits in a good way, and with this last trade it reached new equity peaks. And so we are happy that finally we can also see some profits on this particular market. Now we can move to the next strategy. That is again a mean reverting strategy system. And in particular this time the strategy will enter on the Bollinger Bands, crosses over and under the upper and lower Bollinger Bands. This strategy is on the 5 minutes time frame, and in general we recommend when talking about indicators to use greater time frames, so bigger than 30 minutes time frame, but in this case we used the 5 minutes because we have also changed the period value on which is calculated the moving average of the Bollinger Bands, and so we increased this value to a very big number, so it is quite the same in this particular case. Also, this strategy has performed quite well during the last weeks. We can see also here this beautiful trade along with some other good trades during the last weeks. And also on Monday entered long and closed the trade for an amount of around $800. We can also see here the strategy performance report, and in particular we are seeing also here that the drawdown, the low of this strategy happened during the last months of the 2020, and then from that point the strategy started recovering, reaching its new equity peaks. So guys, try yourself to develop strategies also on this future, because maybe finally it started working again.
Hi everyone, and welcome from Andrea Unger. Today we will have a deeper look into the E-mini Nasdaq future. In particular, I remember you guys, this underlying is listed. This product is listed on in the CME exchange in Chicago, and CME, I remember you, is one of the biggest derivative exchange in the world, and is the most important one into the US. And this product, we talked already about this product when we talked about his little brother, the E-mini Micro Nasdaq, that has been recently added to the CME product list. I remember you also that this product has a multiplier of $20 per point, and the minimum price fluctuation, so the tick size is 0.25 point, that are equal to $5 per tick. So the tick value, in few words, is $5 that is equal to 0.25 points. And the session referred to Chicago time goes from Sunday to Friday from 5 p.m. to 4 p.m. and every day the market is closed between 4 p.m. to 5 p.m. So having said that, with this strategy we will test if it works, also to buy and sell on the extremes levels of the latest N session. So we will optimize this value of N to discover how many sessions give the best results. And to do that, of course, I have created a script for multi-charts. That is the platform I actually use, and I performed an optimization to see which are the best results. So here we have in this column that is called NHL the number of sessions to create the higher level and the lower level, so the highest high and the lowest low. And in particular here we can see that 1 seems to be the best result, and it works also changing the start time hour. So it seems that this kind of strategy gives give good results, also changing the hours of the day a little bit, the times of the day a little bit. And this of course is important because we will be able to test if there are stable values to choose, and if different combinations anyway may give different results. We can see also that 2 is gives good results, and of course with different hours of the day too. So also 2 seems to be a good value, even if it doesn't provide the good results given by 1. Also because the average trade seems to be higher with 1, so it has no sense, of course, to consider 2 days if just 1 gives those nice results. I would avoid 4 because the drawdown is significantly higher, so I suspect this is not it's not worth to consider 4 sessions to create this channel if we have this kind of drawdown that is much more higher than the previous cases. So I just selected one of the most common combinations, so 1 day, and I will start at 6 p.m, so 1 hour after the market has opened, just to skip the first hour. And I also skipped the last hour to avoid the problems with the orders and so on. And this, by the way, is an advice I can give you. So usually just try to skip a few bars a day at the beginning and at the end of the session to avoid the main mistakes and problems. And we can see here the equity shape, in my opinion, is not that nice. Moreover, in this part, it seems to be pretty inconsistent in this part, while it had gone quite well at the beginning for being a very raw strategy. And in the very last periods, so in the most recent years, the strategy performed well, but without a good consistency. But this, of course, is also due to the COVID period, the pandemic period. And in this case here, we are not using any kind of protection, so any kind of stop loss. So it's pretty understandable that there might be some very bad trades in this period. But one of the most important things to remember in this kind of strategy, in my opinion, is that the overall net profit is lower than the profit made only on the long side. And this is because the short side has lost money, would have lost money in this kind of strategy. And in fact here we can see also the equity curve related only to the long trades, and this seems to have a quite nicer equity shape, a quite nicer shape if compared to the overall shape of the equity. And here there is the short side equity, and we can see clearly that since 2011 as year, it would have lost money with a very good consistency, if we can say so. And this is due, of course, to also to the buy and hold. There is here we can find a very strong bullish buy and hold. This is a common situation on some indices like the S&P 2, the S&P 500, the Dow Jones, and the Nasdaq as well. So on those kind of markets, usually I then decide during the development to trade only the long side if I cannot find quite easily an approach, a valid approach for the short side, because it's just too hard sometimes to find something replicable in the future and stable on the short side.
Rollover calendar. We are approaching the first notice day for the metal financial sector on June 30th, so next week we have to roll over all the metal futures. I hope you enjoyed this video, and if you want to learn more about the trading method we at Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the four-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.